ASEAN finance ministers are joining investors and project developers today at the World Bank Singapore Infrastructure Finance Summit. They'll be talking about ways to promote and improve infrastructure projects in this part of the world, Southeast Asia. Well, for more, here's Sumitomo Mitsui Banking Corp's Executive Officer and Head of Asia Investment, Rajeev Kannan. Rajeev, in terms of opportunities for infrastructure investing, where are they?
Well, I think the whole of Southeast Asia is a very big market. I think we all talk about the $26 trillion which is needed in investment in the whole Asia. And when we talk about Southeast Asia, Indonesia, Vietnam, Laos, Cambodia, those are all big markets for us. And we as SMBC are playing an important role in all those markets.
You've often talked about how the bank wants to bankroll mega projects. Is that already happening?
We've had a number of mega projects in 2017, and I think some of the big projects were thermal.
How big are they?
As in, some are probably $2 billion of debt, some are $1 billion of debt, but we also do very small projects. We've done a wind farm in Indonesia, which is like $100 million of debt, for example.
Earlier when we spoke to Joaquim Levy of the World Bank, he talked about how you need to bridge the infrastructure financing gap. Why is the private sector so reluctant to take up the risks of these infrastructure projects?
Well, there are typically a few key issues or risks when we talk about infrastructure financing. One is land. Land acquisition is always a very significant issue. It's a political issue, but it's also a very significant issue because if you don't have the land, you don't build the economic project. And the second issue is the allocation of risk between private sector and the public sector. Some public sectors are reluctant to take on too much of risk, which the private sector also doesn't want to take on. So once those two issues can be addressed, I think there can be a lot more projects which can be financed.
To what extent can guarantees help? Because the World Bank talked about providing these guarantees to the private sector.
Yeah, we see project financing to be done as partnership with various institutions. So we have multilaterals like World Bank Group, then we have export credit agencies, and then we obviously have the commercial banks. So I think when we talk about project financing, it's always partnership. It's never a competition, but it's always a partnership. And as long as those partnerships work, I think we can have a successful project.
Are there more innovative ways to finance infrastructure? Because currently the US, for instance, is looking at equity investments. Is that the way to go forward for it to be more sustainable?
One of the key requirements in the Southeast Asian context is local currency financing. And because we need to provide funding in the source of the income. And the challenge is local countries don't have enough funding domestically. So one of the things which SMBC has done is try to seed or fund local funding sources. So for example, in Indonesia, we financed and supported Indonesia Infrastructure Finance, which can provide long-term funding along with the World Bank Group in that market. So I believe more of such initiatives is what will probably lead to increased funding in those markets.
How can PPP be done better?
It's a tough question. I think PPP is, as I said, a partnership. And as long as the government agrees and recognizes that they have to take certain amount of risk, for example, land acquisition related risks or taking on certain risks related to currency risk, we think there can be a successful outcome. But if the government's view is that they don't want to take any of the risk and every risk has to be taken by the private sector, all the lenders, then we have a bit of a challenge. And I think that's the discussion which we're having during these 2 days, how to have the appropriate allocation of risk between private sector and public sector.
Rajeev, just one final question before we let you go. These are volatile times, especially when you take a look at the markets. You know, it's risk on, risk off, risk on, risk off. What do you make of it? And do you expect volatility to remain at such elevated levels?
We do have some concern about the volatility in the market. Again, obviously, as a bank, we provide long-term capital. So we don't only worry about the short-term risk, but we think about the long-term risk. So as long as we feel that the long-term risk is manageable, we are less worried about the short-term volatility.